Okay, welcome everybody. Today we're going to be talking with David Hernandez about a topic that's on a lot of first-time buyers' minds, or even the people that refinance or purchase, and that's PMI. So, what is that? It's private mortgage insurance. Typically, it's an insurance that's added to your loan that protects the. David can tell us a little bit more about this in a minute, but generally just protects the bank from in case you were to default. It protects them, but it's no benefit to you. But it's an extra cost that goes on your loan. But usually, if you put less than 20% down, now that's what I've always heard. But I thought I would share this, and I thought I'd bring David on to explain it for us. How can you get no PMI with just 5% down? So that's what David's here to talk about. Us. David, go ahead and introduce yourself, and we can get right into it.
All right. Well, thank you for inviting me to this video and formulating it. Basically, what it is PMI. If you don't put 20% down, you're going to be obligated to put that on your loan. And that is whether you're using conventional product or FHA.
Hmm.
The advantage with using the conventional product is that you can do it on that, but you cannot, it's not available for FHA,
Okay.
unfortunately. So then we have to use a conventional, whether it's 10, 15, 20 years, 30 years, whatever you want to use. Now, obviously, there's a large down payment that's necessary. I mean, these prices are going up, so 20% to pay for a down payment is quite extensive and expensive. But now, if you choose to only put 5% down, then and you have a little bit of money to invest in yourself into the payment, why you can buy out the PMI up front. So
Hmm.
then some of the deals that you and I have closed, you are able to negotiate a small percentage for from the seller as a credit.
Hmm.
That those funds there can be used to buy down either the rate or pay off some of that PMI, or a combination of both, whichever you want to use
Hmm.
that credit for.
Yeah,
With
and that's
that,
most
yeah,
buyers hear that it's called a 3% credit from seller for recurring and non-recurring closing costs. So it's kind
correct.
of the norm is 3%, but
Mhm,
yeah. So
correct.
okay.
So then, under those circumstances, then the buyer is in an excellent position to drop down his payment, his monthly payment, which is what most people want these days.
Hmm.
So then that's a strategy that can be used. Now, another strategy that can be used is not only to buy the whole thing off, but if you want a smaller PMI payment rather than the full, you can also pay down that as well.
Hmm.
Now, in all honesty, what happens is that you're going to end up paying that in the amount of time that is allotted, which is around 10 years approximately. It amounts to maybe a little bit less that you would pay if you were to pay the PMI on a monthly basis.
Hmm.
However, the difference being is that you'll be paying less on a monthly basis, and it gives you an opportunity to save on a monthly basis for the next few years. So it's a great tool to use, and certainly everybody's thinking about getting the least amount monthly payment as possible. So
Yeah,
this is a great tool to use.
yeah. Because normally the just to get to your point earlier is like the 20%. Normally, a person would have to wait the 10 years, like you said, or they'd have to wait until they had 20% equity in the house and then request an appraisal and then have it removed. I know that happened with my first loan. So, but you had to wait until the value went up enough. And right now, we're not seeing values rise as quickly as they had been. We're seeing anywhere from 5 to 10% across the Central Coast. So that
Mhm.
does make a big difference for. That's why that's why I'm so excited about this 5% option. That I think more people need to hear about it. And so thanks again for coming on and talking about that. So, what do you think? Should we get into some like real life examples of like how we could take a look at that? How
Yes,
does that seem
absolutely.
like it?
Let's do a side by side comparison and see what it looks
Okay.
like.
Okay. Let me let's see. You sent me something here, so we can share this. And So it's going to be a little fuzzy just because of the way we're broadcasting this, but you should be able to see some of this information here. So we've got 3 columns here. I'll let you go ahead and walk through. I don't know if I can give you control or not. I wish I could, but I just don't know enough about this right now. But just tell me where you need to be to point, and I'll follow along.
Okay. Can you read? Yeah, the font is just a little bit too small for me to decipher.
Oh, yeah.
Can you um,
How's that?
can you expand the screen? I'm sorry, we're going through this, but can you expand?
Yeah. We can even do this. We can take us out of it,
Okay.
and that might give us a little more space there. How's that look?
Okay. All right. Let's see. So the first column, yeah, it's I'm sorry, but the screen is a little bit hard for me to read at this
So,
point.
okay, how's this?
Okay. All right.
We're,
So
we're like at the optometrist. Is this better?
is this better? Okay. So uh, I'm so sorry. I'm not able to read it myself. Can you see it
Okay.
on your side, Israel?
Yeah. So, yeah, and then you know what I'll do is I'll forward you back the what you sent me, and that way you'll have it there as well. So I just sent that back to you on the email.
Okay.
So yeah, the first column here I have it looks like and it is a little fuzzy on just in your defense, it's a little fuzzy on the screen there.
Yeah.
So I apologize for that, but it shows a purchase price of 500,000 on the loan on the first column based on a conventional fixed 30-year Fannie Mae
Okay.
with a $25,000 down,
Mm-hmm.
which it looks like that's maybe, I can't tell if that's a 5 or a 6% on that.
Okay.
And with the base loan amount of 475.
Okay.
So it must be 5%.
Yes, that's 5%.
Yeah. And that's with an upfront MIP/VA funding fee. What's that?
Hmm.
And then there's a loan amount of 475. So in the
Okay.
end, the loan amount is 475. And interest rate 7.5. So we're doing that across the board.
Okay.
And then it shows the principal and interest payment is going to be just under $4,000 or $3,969 a month on that purchase price. So what you're trying to say here is that with this sort of lower down payment, with the 5% down on a $500,000 loan, that's based on any discount points. Maybe that's what we're doing is paying that funding fee down.
Yes, that's what it is. It's
Okay.
I'm looking at your email here. Hold on just a second.
Yeah, no problem. Yeah, and just while he's checking on that, down below we do have the David's information. It's right next to his name as well. And then also we put today's rates that were published as the date of this recording, which is June 21st, 2024. And David made a good point, and when we were talking before going live here, is that rates are always negotiable. So these are the published rates on national average that are being posted by like Mortgage News Daily, and these can be negotiated. So always talk to your lender to get the most current rates and the lender's best rate that they can give you too. So just thought I'd throw that out there while you were checking on that.
Oh, okay. All right. So now I can see those numbers very clear. Thank you for sending that.
Yeah. Okay, perfect.
All right. So that to your question, upfront MIP or VA funding fee,
Mm-hmm.
it's / in this particular case. That's what the PMI cost would be.
Okay.
Okay. So that's what that stands for. Okay. So then, if you compare the down payment on that, it's a little bit or cash to close at the very bottom of the
Mm-hmm.
column. You'll see that they would have to come in with 51,669.91. Okay, at 7.5.
Oh, okay. I
interest.
didn't scroll down here. So
Yeah,
so after all said and done, they would have to bring in 51 grand
correct.
to get that monthly payment of 39.69.
That is correct. Okay,
Okay.
so then there's a savings there of a little over $200, almost $300 if you compare it to the next column. Now,
Okay.
okay, so then we're not including any seller credit on this. And so you can imagine by getting 3% on a 500, that's 15,000. So you can lower that 51,000 by 15,000. Okay, so then the second column there would, let's see here, Fannie Mae 30-year fixed. That one there, the second column is what would happen if we got a little bit of credit from the seller. Okay,
Okay.
and then the third column there would be what would be required if you got no credit and you put 20% down.
Oh, okay. So this is so you'd obviously have a lower down payment if you put 20% down
Co-
overall
Correct.
and
Mhm,
no PMI also. So this is the best case scenario if you've got 20% down, either cash in hand or gifted to you, however that works.
mhm,
That's your best case scenario.
correct.
Um, and that would be $3,400 a month with all things being equal. So then the second column, if I'm understanding correctly, is what it would be, what you would be paying with PMI
Mhm,
on that. That'd be 42.54 a month.
yeah.
But with the 5% and we get a credit, you can lower that as low as 39.69 a month. Is that correct?
That is correct. That
Okay.
is correct.
Okay.
So
So 3% credit, we can get you. Um, we can pay that 12,777. That's prepaying the PMI. You're saying with
correct.
5% down
Mhm.
and getting the payment to 39.69. So 12,000 is that
That's the cost for the PMI to pay it up
okay?
front.
Okay, so we're using almost all of the 3% credit for that then? Is that how
Mhm.
we're doing that?
We can, or what we can do is use partial if they could come in with a little bit out of pocket as well.
Mhm.
So that's again, that seller credit could be used for either paying off the PMI or bringing down the rate or
Right.
whatever
Okay.
we can use it to
Yeah.
lower the payment.
Yeah. So here we're just trying to do apples to apples of
Mhm.
the same interest rate. But of course, if we got a seller credit negotiated into our offer, then we can always get that 7.5% lowered and get that payment down even more.
That is correct.
Okay. And then just, I don't mean to put you on the spot, but like if someone was to negotiate a 1% price drop on their interest rate, how much would that translate to in a payment? Is it like $1,000 per point, more or less?
Obviously, that would be depending on the sales price. But if
Sure.
we were to go like this sample that we have here, you're talking probably about $100, maybe $150 a month.
Okay. Okay. That's
Mhm.
significant.
Yeah,
All right. So if you were to drop the interest rate a little bit, get your PMI gone, you're looking at saving at least $500 a month, maybe a little bit more
that is
on
correct. Just
on
depend.
this $500,000 scenario.
Yeah, that is correct.
Okay.
Mhm.
Okay. Good. Good. All right. Well, I think that covers that pretty well. Because I think most people like we mentioned, they think they have to come in with 20% down to get rid of PMI. Here we have a scenario where with 5% down, you could get that PMI down to maybe not the 3,400 you would if you would put 20% down, but at least
Correct.
you won't have PMI
Correct.
and your payment won't be 42.50 a month. You'd be at 39.69 a month.
Mhm.
Is that correct?
Yes,
Okay,
that is
perfect.
correct. Mhm.
Okay, so that's the benefits of looking at a 5% down program. So thanks for showing us that and getting us the kind of an overview on that. And that's what I wanted. So,
Yes.
so thank you. I think hopefully that's helpful to everybody, and they can give us your comments below if you think this was helpful to you or not. Give us the like button. Reach out to
Mhm.
David with any questions. But before we go, I wanted to also you had mentioned something that PMI is also it's something to consider tax wise. I know we're not tax professionals, but you
Yeah.
brought up a good point about taxes and PMI. And what was that again?
The PMI, you'll have to contact your tax person because the laws change all the time,
Sure.
and so that PMI, may be deductible, but please consult your tax person.
Mm-hmm.
One more thing I wanted to add to this: if you need down payment assistance and want to use some of these down payment assistance programs,
Mm-hmm.
we can also apply these rules of PMI to that program as well.
Mm-hmm.
So, meaning, like for example, if you want to put 5% down on that, we still have a lot of funds from the down payment assistance programs that could even lower that interest rate even more if we get those credits and so forth. So,
Okay.
just wanted to throw that in. It
Yeah.
does
No.
work with the down payment assistance programs as well.
Okay. That's good to know. So, and VA doesn't apply with PM. They don't have PMI, correct?
No, they don't have PMI.
Yeah. So that doesn't apply to a VA loan. We're just talking FHA and
We're
program.
actually talking just the conventional product, no
Conventional. Well,
FHA.
just conventional. Right.
Mhm,
Right.
mhm,
Thank you. Thank you for clarifying that. Yeah.
mhm.
So this is just straight conventional, which is why we can get away with no PMI with the 5% down.
That is correct.
Okay. Very good. Very good. All right. Well, I think we covered everything. Oh, I know one last thing. So how does my credit score impact this? Is there an
The cre-
impact on my credit score?
Yes, it is credit driven. So if you've got a credit score of 700, then you get a certain break. If you go above 720, 740, and then your PMI costs are actually lower.
So
So
that buy down that we saw, um, that 14,000 or whatnot,
yeah,
that would be a lot lower, significantly lower than
it would be lower. I went only to
12
700
grand
just
here.
to be somewhere in the middle of the road.
Hmm.
But yeah, these PMI payments are credit driven.
Okay. So this scenario here, this 12,777 that cost to buy it down, let's say,
Yeah,
that we see here, if my score was higher, then that could go lower. We could get
that is
that
correct.
lower. Okay.
That is correct.
Okay. Good. Good. All right. Well, that was the only other thing that popped into my head that we hadn't talked about
Mhm.
regarding this. Yeah, and if anybody else has any questions, feel free to reach out to David or myself, or put it down below in the comments, and we'd be happy to answer those for you. But David, I wanted to thank you again for taking the time to do this with us today. I know you're busy, and we're getting towards the end of the month in June, and everybody's cranking to get their loans out. So,
Yes,
so
yes,
thank you again for taking this time, and we both hope that this information is useful to you. So please take it and be able to share it with somebody, perhaps. But if you have any questions, again, please reach out to us. Thanks again for listening, folks. Take care.
goodbye.